Today, the sell-off was triggered by the Federal Reserve. After hearing remarks from a Fed official, the gold and silver markets took a knock-to from the central bank. The dealers in gold and silver still don't comprehend why prices are going up, and I almost forgot about that. The timing of the Fed's rate decreases is irrelevant. Whether or if they reduce rates is irrelevant. Rate cuts are never necessary. If the Fed were to leave interest rates unchanged, the price of gold and silver would likely soar. What gives? Because their height is inadequate. The Federal Reserve prematurely ended its price hike program, so if they lower rates, it will be irrelevant. Gold and silver prices will rise regardless of interest rate cuts. However, they may rise slightly faster, for the simple reason that the Federal Reserve will not be raising interest rates. Yesterday, silver prices reached a new 11-year high of $32.63 per ounce, the greatest level not seen since December 2012. But by the end of the same day, prices had fallen to about $32.05 per ounce. In comparison, the price range for the ounce on Monday was $31.10 to $32.48. The price of silver followed a similar pattern to that of gold, which hit a new all-time high on Monday and then fell slightly on Tuesday. As a result of the Silver Institute's continued projection of a structural supply deficit, silver prices have been trending upward over the past 4 years. The recent jump in gold's price beyond $2,400 per ounce, says renowned analyst Peter Schiff, bodes well for silver, providing it with the necessary impetus to overcome its resistance levels. Silver was considerably discounted in comparison to gold earlier this year, when the gold-silver price ratio soared to over 90. As of Tuesday, the gold-silver ratio was around 76, indicating that silver prices were likely to rise due to recent advances. Gold and silver have fell in value due to moves made by the Federal Reserve. There were two primary triggers, as Peter notes. A Fed official spoke on CNBC first, and then the minutes from the Federal Open Market Committee were released. Rate reductions might not start until later this year, according to the Fed official. There might be just one rate cut in 2024 if the cutbacks don't begin until 2025. The gold and silver markets crashed as soon as this news broke. There has been a recent price correction, although it is considered a temporary dip in the market as a whole. Peter thinks there are good chances in both gold and silver, but silver's present undervaluation and great potential make it stand out. Here are the clips of Peter Schiff's observations for you to see. Before we go any further, make sure you're subscribed to our channel and that you're getting updates as we do. Furthermore, they denied purchasing silver. Even if the price of gold has been climbing, investors in the US and Europe have been selling, as seen by 11 straight months of outflows from gold ETFs. Clearly, there is a net purchase of gold equal to the net sale by retail investors. Many of such funds are held by central banks. Meanwhile, silver is not something they purchase. Silver can't fit in there. Their purchase is gold. Consequently, I reasoned that silver was being marginalized, but that it would, like a coiled spring, burst forth at some point. Buy silver, I urged again and again. Something has to rise. If gold continues to rise, silver will fall to the wayside. Yes, I am aware that silver has the potential to outperform gold in a genuine bull market, and I think we are in one right now. It has so been falling behind. Therefore, I wanted my target market to pre-purchase it before we moved further. That breakout, nevertheless, has happened now. So I made that special video on Thursday to let people know about this breakout and encourage them to purchase silver when it happened. In the 2 days after the breakout and subsequent surge to new highs, the price has nicely corrected. While we did see some dip yesterday, today was when it really took a nosedive. Because of this, I brought up the fact that silver reached a low of $32.50. Surely that's not an exorbitant sum. Basically, it's at its highest point since 2013. However, silver has dropped back down to $30.73 as of Wednesday night, when I am recording this episode. From Monday's trade price of $32.50, that's a pretty significant drop of around $1.80. Furthermore, just because 30 OZR has replaced it as support doesn't imply silver can't fall below that level. For silver, though, I'd put $30, which is about the same as $2,000 for gold. The price of $2,000 served as support once we surpassed it. We do in fact fall below $2,000 every so often. It returned rapidly, though, and we never remained below it for very long. Thus, I am uncertain as to whether silver will re-enter the $30,000 range. The amount is $30,000. I don't think it will remain below $30,000 for long, though it might fall below that. Not to worry though, because at $30.67 it's over $30,000. That would be a purchase I could make. A $70 discount from its recent high of $24.50 is applied to gold. Now it's $23.77. It appears to me that the gold support level is rising. It came to $2,200. At this point, it's likely closer to $2,300, and possibly even better. Therefore, I do not anticipate any further setbacks of a larger magnitude than the ones we have seen over the past few days. This is a great chance to purchase both metals, but silver in particular, and I wanted to stress that again. The Federal Reserve was the one who set off today's sell-off, and the Fed delivered a double whammy to the precious metals market with its actions. Because initially, you received remarks delivered by an unnamed Federal Reserve official. Because you could easily flip them around, they don't actually say anything different, so I think it's not that important. However, he did an interview with one of them while they were on CNBC. The minutes, namely the disclosed FOMC minutes, were made available to us later that day. The second punch had been landed. The interview came first. In addition, the interviewee mentioned that the Federal Reserve is still discussing the impending rate decreases. His point was that they won't likely begin until later in the year. Plus, there might only be one if they wait until later in the year to begin cutting rates. After all, 2024 could be the only year with just one decrease. The additional rate reductions will take effect in 2025. As soon as he spoke those words, the price of gold and silver dropped sharply. Although precious metals are often thought of as a protection against inflation, the price movements of gold and silver are not identical. Since traditional demand has far less of an impact on gold in industrial applications, it actually makes for a stronger inflation hedge. Gold may be a good inflation hedge according to some studies, but only over very long time horizons, decades or centuries. An outstanding store of value, gold was characterized in a WisdomTree 2022 insight paper that examined the investment case for the precious metal. Please return to the interview. Government statistics such as the Consumer Price Index, CPI, Producer Price Index, PCE, and GDP deflator all fail to reveal the truth regarding the extent to which prices are increasing. Consequently, they are all meaningless. Plus, they in no way indicate that our economy is expanding. The gross domestic product has grown indeed. There are several things that can raise GDP. The economy may not have improved as a result. A large hurricane strikes, causing extensive destruction. To fix what broke, you have to spend a pretty penny. Everything that contributes to GDP. If the hurricane hadn't happened and we hadn't had to fix all that broken stuff, we would have been better off. The GDP does not account for leisure time. In your opinion, what do Americans want most? There you have it. Free time. That's relaxation. You know, I don't understand why people want to retire. Why should one aim for retirement? Why? Because there is more free time after retirement. You are no longer obligated to labor. No need to worry. Leisure and free time are highly valued by Americans. However, that adds zero value to GDP. I won't be contributing to GDP if I do nothing more than lounge on the beach. My government would rather that I work in a way that contributes to GDP than that I relax in a way that does not. However, my general health and living conditions might be better. If I had more time to unwind and enjoy life, I could be happier. However, the GDP doesn't truly capture that. The point I was trying to make when I first started talking about this was that the Federal Reserve was expressing concern about inflation while inserting those minutes in which they claimed the economy was doing well. Possibly not. Possibly, they are implying we need not be concerned. Productivity improvements will reduce inflation, so we may enjoy this thriving economy without worrying about it leading to price increases. Those productivity gains, however, have no effect on lowering inflation. All they do is dampen price hikes. When the money supply grows, inflation occurs. Furthermore, the government will persist in increasing the money supply due to their lack of alternative. In other words, they will persist in inflating prices. That ensures they will continue to siphon off any gains the public may have reaped from productivity gains. This is the truth of the economic situation. That's why the recent upswing in the price of gold and silver is merely the beginning. Plus, you're eager to purchase any dip or chance. I believe they will be brief and superficial because the major money shift into gold and silver has already begun. There was a rationale for gold's record high price. You would be foolish to brush this off as a minor occurrence. The breakout is also not. The price of gold also didn't suddenly spike to about $2,500 without any notice. It's being completely ignored. Everyone is ignoring it. To what are they directing their gaze? Either, I see. An exchange-traded fund, ETF, will be launched for Ethereum. Well, isn't that the whole point? What's happening in precious metals is being obscured by that. A major monetary event has occurred with silver's price reaching its highest point since 2013. Institutional investment in silver may be hampered in the near future by factors including a cooling Chinese economy and a diminished possibility of interest rate decreases in the United States. Still, experts in the field predict a change in fortunes in the latter half of 2024, coinciding with possible interest rate reduction by the Federal Reserve, which have a history of driving up the price of precious metals. Given the persistence of economic difficulties and inflationary pressures, what is your outlook on the long-term viability of gold and silver as investment vehicles? Use the space below to share your opinions. Make sure to subscribe to our channel and enable alerts to be notified of any new videos we upload if you enjoyed this one and found it helpful. Until the next video, take care.